Hi, thanks for joining us today. I'm Shomit Ghosh, Assistant Editor at ETCIO, and today we look at a fascinating trend that's changing the meaning of banking as we know it. Now, I know you like numbers, so let's start with some stats. Just a decade ago, online banking penetration in India stood at 3.7%. With the advent of mobile banking, digital wallets, UPI, and open banking, that number stands at 40.1% today and is expected to reach 61.7% in 2028. And this trend, my friends, has led to the genesis of banking as a service. In this webinar, brought to you in association with Niveus and Google Cloud, we will discuss challenges, workarounds, and what BFSI companies must do to ensure that they're able to derive data-driven insights, maximize their AI ML investments, and very importantly, manage APIs effectively. Now, to tell us more about it, let me welcome a man with over 2 decades of experience in financial services, specifically around data, change management, and tech implementation. Guillaume Vincents, Transformation Lead, Banking at Google Cloud. Guillaume, thanks so much for joining us today. It's a pleasure hosting you.
Likewise, thank you, Sumek.
Sure. Presently, Guillaume is the APAC Business Development Lead for Google Cloud Apigee. So again, we've got a whole host of information to share with you folks. So thanks for tuning in again. Well, Guillaume, to start with, we know traditional banking has completely changed with the rise of banking as a service. Now, to start with, what are the top trends that have fundamentally changed banking as we know it?
Thank you for your question, Sumek. So let's discuss the trends. What we see is that banks double down on cost transformation to improve financial health. The pandemic and the looming global crisis forced banks everywhere to re-examine their cost base as hedge against uncertainties. Banks need capital to invest in digital banking initiative to meet increased online demands and new age competition. So you see investment in fraud detection, in open finance, in digitization, and in real-time processes. The red part on your screen is very appealing. Banking as a service can unlock latent market potential. Embracing the bank as a service approach will allow banks to leverage ecosystem capabilities to create and tap value streams. So the trend is actually to expand customer base, to reduce customer acquisition costs, to gather new data about customer and diversify revenue sources. Firms that engage in data ecosystem will be future front runners by offering customer contextual and lifestyle banking experiences. And cloud offers a comprehensive approach throughout the entire data lifecycle, from capturing, elimination silos, assimilating data with analytics and AI that support decision making and that deliver data-centric product and services. Banks are all geared to offer better customer experience. It is to leverage on existing client data. It is to improve the friction in the onboarding process. It is to provide contextualization and hyper-personalization. But it is also to transform the branch experience by leveraging on smartphones. And last, and clearly in the limelight lately, it is to leverage on AI ML, so artificial intelligence machine learning, to enable better self-servicing. Now, if we look specifically from a retail banking angle, this is the view for retail bank working in the current operating environment, which with interest rate going up, new operating models triggered by pandemic period, intense competitive environment, and increased focus on customer centricity due to new age players, operational cost overruns, and high capital lock-in. and also I would say dynamic regulatory environments. So banks are forced to compete or collaborate with super fintech to avoid being hit by three things that I believe are dear to incumbents: market share, margins, and customer base. So there is a priority in innovating fast and agile in mobile banking and internet banking, but also to be able to expose products and services outside the four walls of the bank. And accordingly, there is a priority on security and cybersecurity along the digital value chain. And even if I admit that a bank priority is to manage risk, there is always a need to understand the industry evolution. And DeFi, which stands for decentralized finance and digital assets, are another angle where banks are investing in. In corporate banking, it is interesting to see that banks own less and less the client relationship. They're more and more dependent on ecosystem. The client relationship expect seamless and reliable platform. In my previous life, I worked in corporate banking, including in India, and it was fascinating to see trade finance platform creating ecosystem of trust, and I experienced it firsthand. I also saw emerging external platform for primary transaction and secondary trading for corporate loans. So in a way, it is a paradigm shift for a bank to reimagine their roles in financial services and what capabilities to possess and to offer as a differentiator. Hence, there is a need to communicate efficiently and in a secure way with third parties, so all parties can consume and expose product and services the best way possible. The other priorities in corporate banking are mainly related to being data-driven. Not only it does improve the processes on the productivity in front, in mid, and in back office, but also contributing to capital allocation and Basel RWA, as corporate banking, by definition, is quite greedy in terms of capital. And it has a direct impact on the pricing that a bank is able to offer, and that's really a competitive edge in the world of corporate banking.
Understood. Well, you did highlight a very important point there. You know, banks are left with little choice but to evolve or die or phase out. Now, Yim, you've also had a first-hand experience. You've had a front-row view to how retail and corporate banking have evolved. In your observations, as per your experience, what are some of the key challenges that you found in retail and corporate banking?
Yes. So, and the challenge in retail banking. So, I think it is to meet the customer expectation. You and I, we expect real-time processes, but also we expect that banking products are already embedded in our daily activities, which are by definition non-financial. The second one is competition. Competition has always been a challenge, but it's now a lot driven by regulatory constraint and technology rather than geography. Likewise, there is a struggle in the AI adoption. Sometimes it comes from the data culture or the data strategy, or simply the lack of knowledge or talent. We'll talk about that later. And then it's risk. I mean, I mentioned it earlier, but managing risks has always been a key priority, which explained, I think, partly the slowness of some transformation by incumbents. It has some link sometimes with the endless regulatory updates that banks needs to meet. Now, for corporate banking, onboarding is a long process still for many banks, more in corporate banking than business banking, by the way. The corporate CFOs I discuss with, they always mention this to me as a factor to delay or to abandon any new banking relationship. And really, it's a shame. As corporate banking is a relationship business, client expect seamless digital onboarding, but also they expect tailored solutions, which are only possible with data-driven organization. I think the other challenge are a bit similar to retail banking, so I'm not going to go through it again.
All right, understood. Well, you did, bring out a lot of similarities also between retail and corporate, and you've highlighted quite a few differences. Now, there are many commonalities and in the challenges that are tackled by retail and corporate banking. What are some of the key initiatives launched by business leaders to help them grow their revenue and increase efficiency?
Yes, so there are many, but I've chosen to choose about operational efficiency, reaching out new customer, data-driven decision making, and enhancing customer experience, which are really the one that the leaders are following. Another challenge for bank has to do with how they can deepen relationship for customers. So in India, Google data is a window into consumer behavior. We see the search volume for life events like how to buy a home far surpass the search volume for home loan. And this is an example of area where banks can increase engagement with customer and better serve their needs. So traditionally, retail banks have a very closed ecosystem, and customer acquisition is typically done through marketing, which is very expensive. Now, banks and fintechs are moving towards an open ecosystem across the industry, such as telco, transport, utilities, and so on. By expanding the company's partner ecosystem, banks can easily tap onto the existing customer base of the partner to sell more products. The Indian embedded finance market is expected to grow from $1 billion USD, which was what we had in 2021, to $10 billion USD by 2025. This represents a compound annual growth rate of 60%. And we'll see later how APIs play a central role in this expansion on the embedded finance approach. As we've seen, it is key to improve operational efficiency. And the leaders, they gain velocity in their transformation by leveraging on cloud. In my career, I have this trio for now quite a while, which is automate, harmonize, and digitize for all processes. And SaaS, service as a software on the cloud, is the enabler. For example, machine learning is fantastic for anomaly detection, which is perfect for operational risk or fraud detection. Whatever it is in anti-money laundering or transaction filtering, the approach is to minimize or suppress the manual steps and use real-time data via API with internal databases and or third-party players. And likewise, you have it for KYC. The concept is to leverage on players that have modular compliance solution. It should be a plug and play. It can be a provider of real-time registry connection globally or biometric-based identity verification solution. And the idea is again to make API calls to leverage on best of breeds, but also to expose your core services as an internal or external utility. So if you consider you're really good for instance, you're really good at credit scoring, you should expose this service internally and sometimes externally. Now looking at data-driven decision making, I was talking about it earlier, and the race to become a data-driven organization is accelerating. But we still have a long way to go. 91% of organizations are increasing their investment in data and AI, and only 20% of them are succeeding. So that's a failure rate of 4 out of 5. But in contrast, our customers win with data. So what we're going to do in this webinar is to share with you their approach on what Google offers on this. The idea is not to have a pure lift and shift strategy in the cloud. We approach cloud through the prism of business solution. Our clients look into managing every stage of the data lifecycle. They are open and standard-based. They believe in extensive partner ecosystem. They use comprehensive tools and processes in their AI journey. They have an API-first approach to maximize the speed, the scale, the security, and the reliability. So let me give you a concrete example. For corporate and commercial banking customers, we have a relevant initiative example as there is an increasing demand for tools and services to improve the management of their cash position. AI in cash management is used to identify early warning signals of abnormal balance behavior. And it's enabling a bank treasury team and relationship manager to grow, manage balances, and optimize rate and pricing offers. So SaaS solution, they use sophisticated machine learning techniques to help liquidity manager gain visibility into client cash balances and prioritize actions to prevent balance attrition and win additional balance with optimized rate offers. So a good approach with corporate client is to offer API use cases in transaction banking, namely in payments, like intraday or EOD account statement API, a payment status in real-time API, or even a payment initiation API to be integrated with the ERP or the TMS system of the client. And then you can move on to other use cases like electronic bank account management, liquidity optimization, FX, and risk management. Another one that is interesting is on enhancing customer experience. And an initiative in this field is on the digital onboarding. Onboarding new customer is an area where banks need to improve, and it is vital for expanding its business and customer base. I obviously love this topic since I'm convinced on the competitive edge. Plus, as industry-leading technology, we have at Google some solution to enable banks to onboard new customers seamlessly. So we have AI and API capability that can help the financial institution to automate the processing of KYC application and structure the KYC documents into customer entities and relationship. It does increase the KYC processing speed. It decreases the time to onboard customer. It does reduce the associated operating costs of managing KYC programs, and eventually, it does decrease the actual financial crime. So leaders on the market manage to have automation end-to-end. They use OCR and NLP, natural language processing, to structure the data. For example, from a utility bill, they have an API management platform to invoke services, for instance, checking UBO, FATCA, PEP, bad press, and so on. And the last piece of the end-to-end process is the integration in your core system, your CIF system, your CRM system, leveraging on a integration platform as a service, we call iPaaS. So this is valid. Obviously, this is all nice for the happy flow, but also the whole process and technology needs to cover workflow for exception handling. So the integration platform as a service should be able to send automatically an email to a compliance officer, for example, to check why the address does not match the proof of address provided, or if a client is flagged as a politically exposed. So this is a key initiative, and we have demos available on KYC and client due diligence for the one interested in this topic.
Right. Thanks for pointing that out, Guillaume. Now, in my conversations with banking CIOs, and not just from traditional banks, but with neobanks and digital payment companies and instant loan apps, they do have a lot of operational challenges around KYC documentation and the costs involved. Now, folks, I would just like to remind you that here's a man who's got an extensive experience in both forms of banking and the tech applications and banks. Make full use of it, and share all of the questions that you may have with us. For instance, one pearl of wisdom that you just dropped out there. I think it was a few slides back, around from slide 15, is where you pointed out that 91% of the firms are increasing investments in data and AI, but only 20% of them are able to make it to the production stage. Why do these data projects fail, GM, and what must IT leaders do to ensure they're able to get ROI out of their AI investments?
Yes. Let's talk. Indeed, let's talk about the strategic approach to success, because indeed the percentage we mentioned is quite impressive.
Right.
So banks are being forced to respond to the issues that we spoke about earlier through technology transformation program that address 4 problem areas: scale, functionality, monetization, and risk. While there are tactical approaches to address those areas, I want to spend time on the functionality problem. It is now a boardroom conversation. So when you're asking me, okay, what are the successful one doing? They're addressing that point very well.
Right.
In a poll, I think it was conducted by IDC a couple of years ago, 50% of respondents stated 2 major challenges. The lack of real-time capabilities, meaning that in a core banking system, posting are only generated as part of the end of the process. And 2, they have a difficulty in automating business processes and workflow. So, I mean, product manufacturing is a prime motivation for new core system, as the banks seek to resolve long-standing issue in product to market. Many of you, I'm sure, will corroborate from your own experiences that a traditional bank takes on an average of 18 months to roll out changes to a core banking system. So launching a new product requires changes to, let's say, to up to 8 core systems, I would say. What that means is that fintechs are agile enough to innovate while banks are actually struggling. And this is a key driver to looking at new edge platforms like Thought Machine, like Mambu, and so on. But those new edge platforms, they are modular and they are API enabled. And it's all comes down to the business agility. Now that we had a look on how successful players can improve their business by focusing on those problem areas, you can see on the screen the standard the leader are adopting to be successful. And I mean, I don't need to go one by one, but whatever it's transparency, analytics, onboarding, you will notice that they all link to data and agility. And it is important, in my view, that those leaders keep in mind the customer centricity. Those standards are in place to improve the customer experience. The key takeaway from the rise of new customer interaction is that data is growing rapidly, and it's growing at 3 different levels that are called above the glass, inside the glass, and behind the glass. And in order to implement above the glass and inside the glass, so I'm referring to customer experience innovation and unlocking revenue streams, the banks must capture data effectively below the glass. And this requires technology like the cloud to improve business agility and scalable infrastructure, to power digital operation in a flexible way and with minimum cost and labor. So it means cloud flexibility. It means a single platform to manage DevOps across multi-cloud, hybrid, or on-prem. It means a modular application management for faster feature development. It means an agile DevOps for faster reaction to market changes, and also a way to unify data from multiple sources. And you probably guess where I'm going from here, because an API management platform plays a central role in this.
Understood. Right. Now, the next question I have for you again is around the core functions of banks. Now, as you know, core functions in banks have traditionally revolved around traditional technologies, and it's been gatewalled that way. But then Google, as we know, provides business solutions via cloud. It's known for it. How is Google Cloud leveraging API, AI, and maybe even generative AI to create value propositions in the core functions of banking?
Yeah. So, as I mentioned previously, we address things with business solutions. So I'm gonna do this way and provide some solutions. Let's start with embedded finance. As a reminder, it is the integration and provisioning of financial products into a non-financial environment. So you might tell me that this concept is not new, and you are correct. But what has changed is the technology behind it. With powerful API management platforms such as APG, we enable API as a product which facilitate the consumption of banking products and services outside the four walls of the bank. There are three core use cases in embedded finance. The first one is bringing your product and services beyond your bank. Usually the first use case is to a bank that haven't started the first step, is to start with embedded payment. You do that into third-party digital or offline experience. So you enable that you can pay at restaurant using a QR code. So it means that a bank has exposed a QR API, or using several payment options on an e-commerce shopping experience. But also it is to offer instant loan, pay later, any financing capabilities in a e-retailer checkout, or even at POS. It's also adding FX capability to small and medium businesses. It's also being able to compete on marketplace like Bank Bazaar in India, where a bank is able to propose quotes and product. The second type of embedded finance is providing other products and services into your bank. So you can offer white label product to existing customers as an extension of your current product. And by this, I'm telling my client it's a smart way to innovate fast and cheap by consuming third-party APIs and let the development teams build on top of reusable API. And every API and services is deployed to production faster through automation, API governance, and rapid backend integration. A good example for SME is to offer is to offer them with a B2B customer e-invoicing and bill pay and B2B payment and cash flow analytics. And this can be done by consuming third-party API that you expose, you consume it and you expose it to your first-party app. Another example of bringing other products is bringing external financial education or advice tools in the bank existing experience, like cash flow forecasting, loan calculator, or the one that is quite popular is personal finance management. So banks are bringing a dashboard for you, like on your net worth, for instance, and very often they do that by consuming API from other players. But you can also bring external tool to power banker or operation ops experience. Like you can bring a banker calendar appointment tool for customers or a credit card rewards platform functionality for servicing. The last type on the right hand side is sharing and consuming data with or from partners. I see two kinds. There is meeting regulatory compliance and provide your customers data to other trusted party using open banking protocols. So I don't see that in India yet, but obviously it's quite developed in Europe with PSD2, in the UK, in Australia with CDS, and there are a few countries like that. And the other kind is to consume third-party data. For instance, I work with a bank in India where they consume alternative data to provide them with early warnings on credit portfolio. So they're actually consuming from many different sources, and that enables them to improve the health of their credit portfolio. This one is just an example of embedded finance and where the loan application and underwriting is done real time and the online shopping experience. And looking at the time, let's not spend time on it. To be complete on this solution on embedded finance, so it is leveraging on the power of RPG to create shovel-ready API for embedded banking that is FSI compliant. It's out of the box, and it works also natively with consent management and identity platform management. So most of the time we work with the solutions and the identity platform and the consent management that the bank has already have, and it works. RPG works natively with them. And this aspect is really important because consumer trust is key. The success of embedded finance is there only if the consumer know they can grant and revoke third-party access on their data whenever they want. Now another solution is contact center AI. 30% of critical customer interaction at financial institutions occur in contact centers. And this year, we estimate that 40% of contact center interaction will be fully automated by using AI, machine learning, and self-services. And it's up from around 25% a few years ago. Yet, what we saw in the market is that, and many people will smile, is that conversational bots, they lack language support and have very limited intents. They have expensive agent assist feature and a lack of sentiment analysis and less capable NLP inside. So through Google Cloud Platform, we can help you to resolve all the problems faced by this feature and availability. The Google Cloud Contact Center AI, they solve the challenge associated with legacy contact center, which is about human-like text-to-speech, AI-based call routing that learns over time, advanced speech-to-text, knowledge base for human agents provided in real time during calls with AI, and integration with existing technology system. So contact center AI, like all AI, is most effective when it is woven into the fabric of the business via API. But let me be frank. I mean, developing API for CCAI fulfillment is not a small thing. It requires API that usually you don't have. It requires significant level of collaboration with bot building teams. Exposing an endpoint won't cut it. You will need orchestrated API, and you will need to change them often. So orchestration and flexibility are paramount to working from customer experience as opposed to translating complexity of data system like we had in traditional IVR. But the good thing is that RPG has pre-built component to make it easy, and RPG is able to look for the information needed in the core systems of the bank. Another solution is called Landing.AI. AI continue to transform industry across the globe, and business decision maker of all kinds are taking notice. One example is the mortgage industry. Lending institutions, they process hundreds of pages of borrower paperwork for every loan. It's a heavy manual process, and at most of incumbents, that adds thousands of dollars of the cost of issuing a loan. Borrowers and lenders, they want an experience that doesn't include incomplete loan packages due to data entry errors and publication, and to close mortgage loans in a shorter time frame. So in this industry, the borrowers and the lenders, they have high expectation. They want a mortgage document processing solution catered to improving operational efficiency while ensuring speed and data accuracy. And they also want document automation process that help enhance their current security and compliance posture. And Doc.ai enables you to unlock insights from your documents with machine learning. It enables business to make better decisions, such as analyzing customer feedback, processing invoice, or reducing mortgage processing time. And mortgage packages is an ideal use case for document AI. I mean, you have many use cases for Doc.ai, but mortgages, you have high volumes, you have a mix of structured, semi-structured, and unstructured content. You have strong entity and content validation requirements. You can feed you feed into multiple downstream analytical and operational data flow. And again, you're going to use RPG as API management platform to make an API call to integrate this data into your mortgage process. Now I want to share some use cases where we leverage Gen AI. I know there's a lot of hype about it, but we have been working on it for a long time. The first use case we look at it is a personalized financial recommendation. In financial services, building customer relationship is about developing trust. Today, most of financial institutions have to make product recommendation based on broad customer segmentation because they don't have tools to deliver hyper individualized and contextualized recommendation at scale. And this leads to ineffective marketing and reduced customer satisfaction. So with Gen AI, banks can help improve cross-sell and retention strategy by having a one-to-one instead of one-to-many messaging. It can tailor product recommendation via conversational language, as we saw earlier, and it can provide customized offer to existing customers based on their behavior and then spending patterns. So imagine today, instead of getting one-off product-centric marketing offer based on the small set of data points, that you get an offer that is based on your spending, it seems like you travel a lot, but you haven't maximized your credit card reward. And with this card, you would have enough miles to go to France. I choose France because that's I'm a citizen. And the process to switch to the better card is actually seamless. So I've chosen to show you another one that leverage on GenAI. Actually, it's on large language models. And it can assist you in improving the client due diligence process and productivity. As you're likely aware, and probably you have dealt with, paper is everywhere in some financial services across underwriting, trading, lending, claims, and regulatory processes. GenAI, they can identify a relevant document set, summarize it, and explain its relationship to other documents. This hugely increases efficiency in processing documents. It ensures accuracy and completeness, even flags potential risk or financial crime. So what we work with some clients is to import proprietary data assets, including relationship manager reports. Then we process them with DocAI, as I explained earlier. Then we have a compliance officer to do a prompt query. For example, what is the source of wealth for this customer? And this isn't your old school keyword search. With semantic-based search, you can write your request in plain language, and the tool will do the work to understand the intention behind your query. And the tool is able to provide you with the answer, get instant summaries, and synthesize all findings. And the cherry on the cake is that when they saw that, the banks ask us to monitor which department is actually querying and how they can do the cost chargeback. And because it is all API based, we did put RPG on top of GenAI to do this natively. So the banks have the right analytics out of the box, and they can monitor the traffic, obviously, but they can also do the chargeback accordingly. Likewise, we have the same thing for capital market research, because GenAI can go much faster. I'm not going to go into detail on this, and same thing for our developers. I've seen it with my colleagues that are customer engineers. They basically use this technology to code without knowing, for example, what is how the Basel RWA is calculated, but they're able to adjust the coding accordingly. Yes, I think I'm going to stop there for the solution. We have much more, but I think that those ones are relevant for today.
Thank you so much. Well, I had a couple of questions around APG and APIs in general. But since we've just spoken about generative AI, we've got a question from Tommy Hartono that I'd like to take right now. So Tommy says, I saw some of the use cases that bad actors are using Gen AI to fool KYC processes. What do you think about the risk in this area?
So to answer for that, first one is, that's correct, because that's correct in the sense that does Gen AI is giving the truth? Not necessarily, because it's based on the information that you're having, so the data set that you have, and so on. But let's not be fooled. I work in a bank. The objective is to manage risk, and this is exactly what we're addressing. So there is always a human factor on this, and when you do a prompt query, when you got the answer, you also have the link to where it's coming from. So it's not like you take the answer for granted. You know where it's coming from, and that's the reason why why basically you cannot fool a bank just by saying, "Hey, I'm going to use Gen AI to form." Right? It doesn't make any sense. Specifically, Google technology has this competitive edge to provide where the information is coming from.
Agreed. Well, if I come to my question around Apigee now, what would you say? What differentiates Apigee from other API management tools from a functionality, scalability, and security point of view? What I'd also like to know is, could you tell us a little bit about the integration capabilities with legacy or maybe with Azure or AWS environments?
All right. Yes, it is indeed a key question. I mean, I'm happy to talk about it because, yeah, the growth of API is massive. We saw last year growth by 200%. So let's go through why Apigee has a massive differentiator. Actually, it has several, but you understand it's a API full lifecycle management platform. So it's first thing you need to understand, it's not a mere API gateway because it's a full API lifecycle management. It does include a number of competitive differentiator. First one I would say, which all our clients are talking about, is the developer portal. We have a built-in integrated portal which enables to quickly deploy new use cases by exposing API internally and externally, which means that you can be live. So, I mean, I'm not a tech guy, and I was able to do it in minutes. But we also have a Drupal version to bring partner workflow onboarding and further customization. The second differentiator is on productization. So it is an outside-in concept. You enable your partners, so for example, a merchant or a retailer, to find on bank developer portal the relevant product for their needs. So it's a console-like access, and it means it is a marketplace enabler. And a third one would be monetization. We have an out-of-the-box module which provides flexibility in a monetization construct. Well, you can create a variety of monetization plan that charge developer or pay them through revenue sharing for the use of your collaboration in business. Maybe last one on capabilities, shared flow. You're able to combine the agility to have all entities, for instance, a business line or country, to create their own API, but at the same time have a framework of common standard and policy enforcement. That can be done at central level. That's really important. We have spoken about the outside in and the importance of API productization. And as the API program grows, both in terms of consumption as well, more line of business get onboarding onto the platform, we see a pattern which extend the API fabric into the integration space. So Google Cloud provides a cloud-native solution for application integration so that you can focus on automating your business processes with application integration instead of infrastructure, software upgrade, and legacy licensing costs. And the key benefits are low or no code orchestration, a unified connected portfolio, and a visual data mapping. And that works with, it can connect to SaaS or core business system. If I ask you how many API do you have in your company, in your API lifecycle and established governance checkpoint, this is also a key differentiator for API lifecycle and established governance checkpoint. This is also a key differentiator for our client. The last differentiator I want to mention is API security. Apigee helps you build, manage, and secure all your APIs. We have an out-of-the-box features for traffic management, for access control, for mediation and input validation, logging, observability. But we also have a new product called Advanced API Security. And this product includes premium security features such as providing the user visibility and control to API security configuration. And with this new feature, the customer are able to ensure that their API proxies adhere to security standard and avoid misconfigured API that might lead to security leaks. And they will know if an API is deployed without the right security policy, and they will get a recommended action from the system on how to fix it. The second one with this tool is around abuse detection. We have a lot of detection rules and reports, and those behavior rules are based on RPG deep experience in real-world API traffic in customer-focused industries such as retail and telco and obviously financial services. So RPG has years of experience in helping protect our customer intellectual property from attempt to programmatically scrape content or brute force access. So we have enabled bot and abuse detection that you can easily reduce the impact of this type of attack. It has also machine learning models, but I won't go into detail. And this is my last slide. What I want to say is that we have different pricing model. So it means that we have obviously subscription, but we have pay as you go. So it means that we're able to enable you to start with no upfront commitment. So you pay only for what you use. So Mick, I'm done. I'm on time for questions.
Absolutely. I think you've timed it perfectly. And that was really a fascinating session. Thank you so much for that, Guillaume. You've covered a lot of ground with the questions and the slides that you ran us through today. Now, I've got a couple of questions that are very specifically towards the Indian banking space. The first one I'm going to take is from Sridhang Sarpottar. Now, Sridhang's asking, how do you see AI working with regulatory bodies such as the RBI? There would be a need to focus on AI explainability if retail customers want transparency on decisions taken against them. And I think the RBI, in his opinion, is also going to be pretty interested in this aspect. What are your thoughts around this on explainable AI?
Okay, I love this question. When I was working in a bank, I specifically work on this topic. We had a model for credit, and the more we were enhancing our model, the more it was difficult to explain the model, and it was also unethical. So there were two aspects to it. And I think in both cases, any regulator would be interested into that. So we provide the technology, but I don't think it's a technology question because the technology is there. It's really in a bank how to make sure that you have this auditability and explainability. It's really important for not only for regulator but towards your customer. If you're decline a credit application, you need to be able to explain it. That's one, and also you should have an ethical committee because if you take into account the postcode, for instance, in your model, you'll find out that where you have very poor area, the postcode will be then excluded by default.
Understood. Well, that was a great answer, and thank you so much for your question, Sridhang. I think it was a very pertinent one. My next question that I received is around rural banking in India, Could you tell us some of the strategies to address the unbanked population in rural banks? And also, how do you see the role of the cloud in getting to our unbanked population and catering to them?
Okay, thank you for this question. I'm going to refer to one of our clients, a bank in Indonesia, that we're working with them for a few years. I would say at least 5 years. They have this objective for inclusion because the number of unbanked is quite large. I think in India it's between 150 and 200 million, but I think in Indonesia it's quite high as well. And in most of the case it's in rural area. So what they did, they launched a nationwide network of branchless agents. And these agents can open new account, take deposit, pay out, withdrawal, and process and disburse loans in less than 2 minutes with a microfinance mobile app dedicated to them. The bank is able to handle their own risk scoring and automate payroll deduction for payment, so they can mitigate the risk, and they use RPG as the central nervous system for all communication between the digital core banking, the microservices, the front end, and the apps. But you know, Sumit, for this question, I think the sky's the limit. We have a client. They find a way via API to build credit scoring for those unbanked people that have no banking history. They did partner with a telco company, and they looked at the history of those people that apply for financing, and they looked at their history within the telco, how they recharge, their geolocalization, with whom they're talking to, and so on. And they managed to build a credit scoring system. So I think there is creative way to tackle financial inclusion.
All right. Thanks for that. And yes, it is a very pertinent thing, although our government has taken a lot of initiatives to reach out to the unbanked population. The percentage still, boils down to a very large number. So thanks for that. Now, from the last question that I would like to take is, could you also expand on the 4 problem areas of banking and cloud? The ones most cited are, of course, scale, functionality, monetization, and risk. So, how do you specifically address each of these aspects?
Are you referring to this slide?
Correct. Yes.
Okay. So I've been talking extensively about the number 2. Number 1 is really about scaling. That's where cloud came into the play. For many banks at first, is ability to manage surge in transaction volume, and it's API is very important in this, and we see it, on Black Fridays and all those days where there's a surge in transaction volume. If you do not have the right technology, so in our case, a proper management platform with a spike arrest and all those functionalities, your customer are going to experience actually gonna have a very bad experience with system down. And it's valid. It's really important to have this management platform to manage the volume so that the backend are not overflown. Number 3, which is about ingesting real time, is about the same. Is if with the API technology you can do real time. There are too many protocol in the bank that use SFTP, MQ, batch, basically, and that does not able to leverage on the data that you have, that you can react right away to the behavior and the activity of your customer, and therefore you need to have something that enable you to cross-sell and upsell. And the last one is about risk, and I think I was talking about it earlier, specifically in cybersecurity. When I was talking about what we have in terms of out of the box, in terms of advanced API security, it's about having a way to monitor and to prevent this kind of misusage of the system.
Got it. Understood. Well, that pretty much answers my question and almost all the questions that we had from the audience today. Again, it was a lovely conversation, Guillaume. Thank you so much for that. It was an absolute pleasure hosting you. You told us a lot about, corporate banking, retail banking, the complexities, challenges, similarities between the two, and also the role of APIs in modern banking, and how it serves to be as the backbone of banking as a service in India and the world today. So, ladies and gentlemen, that's pretty much all we have for you. Thanks again for joining us. Your host, Soumik Ghosh, Assistant Editor at ETCIO, and many, many thanks to Nivius, especially Guillaume Vincenz, the Transformation Lead of Banking at Google Cloud. Thanks again. I hope you have a great day ahead, folks. Thanks. Bye-bye.
Thank you. Bye-bye.